Hello traders and welcome to another video review. Today is Thursday, April 24th, 2025. Let's take a look what is going on the Forex economic calendar today. No important data releases during the Asian session, but we got some during the London session. German business expectations, current assessment and IFO climate index are scheduled for release at 10 o'clock. Then we got unemployment rate in Poland, then CBI industrial trends orders from the UK, this is at noon. German President Joachim Nagel will give a speech at 2 o'clock. Then we have the call durable good orders and durable good orders data scheduled for release at 2:30. Initial jobless claims are scheduled for release at 2:30 as well. So first, very important data releases. Existing home sales are scheduled for release at 4 o'clock as well. And then we got the usual ones, which means Atlanta Fed GDP now is scheduled for release at 7 o'clock together with a 7-year note auction. Fed's balance sheet is scheduled for release at 10:30, and 30 minutes later FOMC member Kashkari will give a speech. So London session very interesting because of the German data. US session very interesting because of the core durable goods orders, initial jobless claims and existing home sales data that might affect the market. So without any further ado, let's take a look at the charts. We start with euro dollar. The euro dollar has moved lower from the local high at 1.1440. And it tested the yesterday's low at 1.1309 actually. But we are still trading above the key technical support. Let me just move my level here, which is located at 1.1265. Please notice that this is still wave 4 unfolding, right? So we got the top for the wave 3. This is A, B and C, possibly a simple correction to the downside, possibly completed in form of the wave 4. So we are still waiting for the wave 5 to the upside. So right now corrective cycle might be completed if we break above the level of 1.1574. Then we have the confirmation. This is the A, B, C corrective cycle in wave 4, and wave 5 is in progress. Let's take a look at the British pound because we got some data from the British pound, from the UK. Cable, similar to the euro dollar, cable moved lower to test 1.3233, and it's trading below this local technical support. Nevertheless, let's just move this technical support right now here because it looks like it's much more important for the markets. We are still above 1.3206, another technical support, and definitely above 100 periods moving average, 1.3202. Momentum is weak, momentum is negative 45 points only. So as long as we stay here in that range, the momentum should stay at least negative, maybe neutral. But in order to get the momentum towards the let's say above the level of 50, back into the positive territory, we need to break above the level of 1.3421 at least. So then of course the bulls will be in charge of the market and the market will rally higher. So that's the British pound. Let's take a look at the gold market then. So this situation here looks very interesting. This is a 4-hour time frame chart of the gold. We got this temporary technical resistance here, 3,500. all right, and then there is a bearish engulfing pattern quite well visible here on the 4-hour time frame chart. Then obviously we got the sell-off back down even below 3,283. The local low is 3,259. Then of course some sort of the bounce is happening. However, it looks like the bulls are a little bit tired with this rally, and they might want to extend the drop in favor of bears, right? So let's apply our Fibonacci retracement level. Let's apply this here on the chart. So this is the Fibonacci retracement of the last swing, just the where is my there you go, just the last swing. Okay, let's just leave it like that, and you can see that we retraced 38%. Right, so that's obvious. Now 50% retracement of the last swing up is 3,228, and 61% is in line with this swing high at 3,167. So there is still some room to the downside, and with negative momentum, which is slightly bouncing from the level of 36 points, we might see A, B, and C to the downside on the gold soon. So what I mean is, let me just hold my corrective wave labeling. So that's the wave A. Possibly wave B is completed. If not, then we will have some wobbling in wave B, and technically sound would be extension of the wave 3 towards 61% of the Fibonacci retracement, and then the correction would look like this. And after this correction is done, if this is of course the simple correction, the market would be ready to rally back on higher. Right, so ABC scenario is visible here. What is going on with the S&P 500? So we are still observing the S&P 500 on the 4-hour time frame chart. The bulls wanted to test the technical resistance. We have it marked with this blue arrow again, but they failed. The local high 5,469, which is still below 5,500 level, and quite good job bulls did, because they went towards the level of 70 on the momentum on the RSI indicator, so they hit the extremely overbought conditions. So if we break above this technical resistance or supply zone, then the outlook is even more bullish, right? Because we will enter the very, very positive sentiment zone on the RSI. Now there is slight pullback, possibly towards the 100 periods moving average, maybe lower, but it looks like the bulls wants to move away from these lows that were made at the beginning of the April, and they want to and at least this week, there's only Thursday and Friday left for this week in trading on the S&P 500, so they want to end this week a little bit higher than it is right now. However, the market, as you can see, is still range bounded, right? It's close between those two ranges. Important technical support, important technical resistance, and we are waiting for the breakout. So plenty of things can happen inside of this trading range. And last but not least, of course, Bitcoin, because Bitcoin is rallying. Very interesting candlestick pattern has been made after the last wave to the upside was made as well, towards the $95,000. So the high was 94,733, and this is long-legged doji, almost a doji, little bit too much of the body of this candle. However, we can say it's doji-ish long-legged candlestick pattern. And you can see we got the confirmation of the downside movement. However, the low of this range, of this doji, let's say range, is the level of 91,900. So we need to break below this range low to confirm that the temporary top is in place. And we are coming off extremely overbought market conditions on a 4-hour time frame chart. So we should see some kind of a movement towards the level of 50, maybe 53, maybe 55. That would correspond to this zone here, which is obviously the old supply zone, and we should see some sort of the bullish interest in this zone, right? If the bulls wants to continue the uptrend, the local uptrend. Okay, so we should see some bullish interest inside, and the market should bounce and rally higher. Right now, the current situation looks very, very good for bulls. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.